Good morning, it's me, Kenny Polcari. I'm your host of the party. It is a morning market commentary. What's going on in the markets, what happened last week, what's happening this week. It's a shortened week as we celebrated the 4th of July over the weekend. Monday was a holiday. So today is really the beginning of the week. And so what is it that we need to know? What should we be thinking about? Well, Friday's NFP report suggests it's a Goldilocks recovery. 10-year treasuries fall again, giving much more strength to equities, right? Dow, S&P, and NASDAQ all notching new closing highs on Friday. OPEC remains in turmoil. No production increases, nothing on the horizon, and oil surges up and through $76 a barrel. REvil launches a global supply chain ransomware attack. And you remember that was the same group that has been attacking U.S. assets. And what are we having for dinner tonight? We're going to have the roast pork loin with peaches and honey. It's really good, simple to make, but we'll get to that in a minute. So the government comes out and reports that job creation was better than expected, which is no surprise, but that overall wages did not surge higher than the expectation, right? Although there are pockets of concern, and we'll come back to that. That set the ball in motion. Futures, which had been kind of churning around the unchanged line, suddenly turned decidedly higher on Friday morning, and they were off to the races. Suddenly it was that Goldilocks recovery. Not too hot, not too cold. It was all just right, and that's all the algos and the traders needed to hear. And the rest is history. The bell rang at 9:30. Stocks took off. By the end of the day, the Dow, S&P, and NASDAQ all closed out the week at new records as the summer rally just kicks into overdrive. The Dow adding 152 points, the S&P up 32, the NASDAQ was up 116, while both the Russell and the transports ended the day lower, which is a bit curious considering all the talk. But the Russell lost 23 points or 1%. And the transports gave back about 41 points or just 0.3%. Now, it does make some sense, right? Considering that both the Russell and the transports have so outperformed the other indexes. So as investors look to reallocate monies, what do? Well, they don't take them out of the underperformers. They take them out of the stocks that have been outperforming, maintain a position, and redeploy those monies into some of the sectors that are now seen as the favorites going forward into the second half of the year. Now, the gains in the broader market suggest exactly that the recovery is exactly what Jay Powell has said it's going to be, right? Telling us that the economic growth is going to accelerate, but that any inflation threat is just transitory, right? It's temporary. The idea that there's any kind of tightening ahead appears to be only a rumor. Why? Because the stronger jobs data does suggest a continued recovery, but the uptick in unemployment suggests that there's still a slack in the system. To which I'd say, maybe we should just stop paying those extra benefits and get all those unemployed people out there, give them a reason to go out and get one of the 9 million plus jobs that are out there available. I mean, what we're seeing now in the 23 or 26 states that have stopped paying the extra benefits is actually a decrease in unemployment rates, right? It's funny how that works, although this morning we hear that many of these people are now suing the states for those extra benefits, saying it's illegal for them to stop. Whatever, it's a whole other conversation. So what are the pockets of concern? Well, leisure and hospitality showed wage increases of 2.3% month over month, and average earnings that's 2% greater than the broader reading of just 0.3%. And if employers have to continue to pay up for workers in the service sector, it could ignite a surge in other sectors, which is going to cause that inflation spiral in wages, and that's going to set the whole thing in motion once again. So you have to ask yourself, is this one data point that canary in the coal mine, right? Is it just the one that's signaling maybe trouble ahead? Look, it's just food for thought, but as of Friday, traders and algos and investors put all inflation concerns on the back burner. Growth names took the lead. Tech was up 1.3%, healthcare up 0.9%, consumer discretionary up 0.8%, communications up 0.7%. And the growth ETF is attempting to take over the role as the leader versus the value ETF. The growth gained 1.2% versus value up 0.2%, but value is still in the lead at up 16% year to date, while the growth is up 15.7%. Now it's still within the margin of error, but value is still in the lead. But more talk of a dovish Fed. Watch as growth just rips it up and tears right up through value. But if the talk turns hawkish, then watch how growth gets hit and value once again succeeds, right? And in another turn of event, the disruptive tech, right, the ARC names, which had surged recently, up 32% off the May lows, did see some selling pressure on Friday as, once again, the trader types are ringing the cash register on stocks that have outperformed and taking that money and putting it into sectors that are expected to do better in the second half of the year. And I still think disruptive tech is great, but it's had a great move, so This week does not bring a lot of macro data points, but it does bring us the latest FOMC minutes, and we must ask the obvious question. Will the Fed minutes catch us off guard? Traders and investors are going to be listening intently to whether the hawkish comments made by Bullard, Bostic, and a couple of the others match up with the minutes of the meeting, or are they going to completely contradict them? Recall what happened in April when Jay Powell told us they weren't talking about tapering, they weren't at all. Yet the minutes, when they were made public, told a different story. Some of the FOMC members did in fact say that it would be appropriate to begin discussing tapering and interest rates if the economy continues to push ahead at breakneck speed. And you recall what happened, right? How investors and traders and algos reacted once that news hit the tape, right? There was that contradiction. So just sit tight, strap in, because anything that veers off of what the markets expect is going to open this door to this new round of volatility, which is going to provide both angst and opportunity. So buckle up, don't get nervous. 10-year treasuries ended the day on Friday yielding 1.42%, which is even lower than the day before, suggesting that the economic environment and the robust recovery, coupled with the compassionate and accommodative Fed, is creating an environment that continues to fully support equities, as well as a number of our assets. So let's not go there. The VIX ended at 1587, again very complacent. The dollar index is trading at 92.38. Gold bounced off the levels I identified last week down at 1760-ish and is now trading back above $1,800 an ounce. Oil is surging higher again because OPEC Plus cannot agree on baseline production levels from some of its members, and U.S. producers who had shut down wells during the COVID crisis have apparently been slow to bring them back online, which is curious to me since oil is up more than 120% from the depths of despair. West Texas Intermediate is now trading at $76.33 a barrel, and is now, what I just said, by now you've heard that the United Arab Emirates has drawn a line in the sand and refuses to participate in increased production unless and until they increase their baseline production levels going forward. And if you change the levels for one of them, the United Arab Emirates, then you have to consider changing for others, Iraq being the next one that would start to argue about their baseline production, right? OPEC. These two members specifically are feeling very slighted with their baseline production numbers, and while they went along with it at first, now they want to change the numbers, and so that's providing some headwind, right? But prices are going to go higher because global demand is alive and well. We've been talking about this. So Goldman has a $100 barrel of oil on them, as their target by year end. If that's true, U.S. consumers are going to be paying $5 a gallon for gas. And Joey's just encouraging OPEC to play nice in the sandbox, so it doesn't look like he's being very successful. Over the weekend, there was word of another ransomware attack. It's believed to attack hundreds of organizations worldwide, potentially tens of thousands of computers. The story in the Wall Street Journal goes on to say the group known as REvil has focused its attention on a company called Kaseya VSA software used by large companies and technology service providers to manage and distribute software updates to systems on computer networks. The largest attack, this latest attack appears to be the largest ever. The incident may have infected as many as 40,000 computers worldwide in what is being identified as a supply chain attack. Cybersecurity companies around the globe are working hard to address the issue. REvil's asking for $70 million in Bitcoins as ransom, although experts are suggesting that that ransom could be negotiated lower to something like 20 million, which is good, right? Joey telling Vlad that this isn't fair, this has to stop, and so it goes. I'm not really sure how that's working out. Doesn't seem to be working out very well. Look, from my own perspective, I wonder what's going to happen when they attack the global financial system, because it's coming. It's just a matter of time. It's not if, it's just a matter of time, because that would cause complete global disruption. This morning, U.S. futures are hovering just around the unchanged line as the market got ready. Dow futures were down 2, S&Ps were down 2, NASDAQ was down 8, Russell's unchanged. Eco data today is all about the services PMI. Remember, the U.S. economy is 75% services. Market U.S. services PMI expected to come in 64.8. ISM services PMI expected to come in 63.5, both very strong numbers. So the surprise is going to be if they're stronger or weaker than that expectation. Weaker numbers will suggest a slowing economy. I don't think it's happening, but anything is true. While a stronger number is going to suggest a roaring economy. And since we already saw a spike in wages in the leisure and hospitality industry, A stronger services PMI is surely going to put even more pressure on employers to raise wages again. And there we go. The whole inflation story gets moved to the front burner once again. So sit tight because it's only a matter of time. European markets are just a bit lower this morning. Higher oil prices throwing cold water on the investor psyche. German industrial orders fell by 3.7% in May versus the expected rise of 1%. And the German ZEW economic sentiment indicator also at its lowest level since January of 2021, falling 16 points to 63.3, below the estimate of 75.2. Eurozone retail sales, though, rose by 4.6%. That's a positive. Yet all markets are lower across the board by about 25, by a quarter of 1%. Bitcoin's trading at 34,000, Ethereum's trading at 2,300, and Dogecoin's trading at 24 cents. Look, the S&P closed at 4352, advancing even deeper into the next century mark. Expect some consolidation as we move into earnings season, which begins in earnest next week. The current S&P channel remains 4226, 4406. So we're kind of, closer to the top end of that range, but that still remains within the channel. You know what you can do? You can text the word invest to 21,000 to get my digital business card. Give me a call, send me a text, reach out. I'm happy to discuss the markets, a plan, ideas, thoughts, concerns, whatever you have. And you can also follow me on Twitter, right? It's just my Twitter handle is just my name, at Kenny Polcari. And I'm always happy to interact with you there as well. So what are we having for dinner tonight? I made this roast pork loin over the weekend, right? With this peach and honey glaze. Call it a glaze. It was so simple to make. Doesn't take long to cook, and it presents really beautifully, right? And so you get this, what you need for this is you need the boneless pork loin. You need a can of peaches in the juice, right? Just peaches in the juice. You buy them in the fruit section, right? In the canned fruit section. You're gonna need brown sugar, you need honey, and you need fresh lemon juice. So you need a couple of lemons, so you get the fresh lemon juice. That's it, and you need salt and pepper, right? So you wanna preheat your oven to 400 degrees. Get that ready, get that going. You want to take your pork loin, you want to season it just with salt and pepper. So sprinkle it all over, rub it around, massage the salt and pepper into the pork loin. That's it, nothing else. It's that simple. Take the pork loin, put it in a Pyrex dish, and put it in your oven. You're going to roast it on 400 degrees for about 30 minutes. Then you're going to pull it out. But in the meantime, while it's roasting, in a pan on the stove, you're going to add the canned peaches. Just dump the whole thing right in the pan. You want to add the juice of maybe a lemon and a half. You could put two lemons. You want 2 tablespoons of honey and a half a cup of brown sugar, right? You want to put that on the stove. You want to heat it up, bring it to a boil with the back of the spoon. You want to kind of smash the peaches up so they get all mushy, right? Cook that for about 3 to 5 minutes. Turn it off, let it cool. Now after 30 minutes that the pork loin's been cooking, pull it out of the oven, take this peach and honey glaze and pour it all over the pork loin. Pour everything right into the baking dish, all over the pork loin, put it back in the oven, let it cook for about another 20 minutes or so, 25 minutes. It should be done. After about an hour, the pork loin should be done, unless you bought this massive pork loin. But a normal sized pork loin should certainly be done. After the next 30 minutes, pull it out of the oven. You can slice it just to look to make sure it's done. Once it is, then slice it into pieces and then arrange it on a nice platter and then take the juice, the peaches and the honey juice that you put, the glaze that you poured all over it, and then just pour it all over your sliced pork loin. And you can serve it with mixed green salad. You can serve it with some with a vegetable of your choice. I always like either broccolini or I like broccoli with this. It's always great. It's simple. It doesn't take long to make. It's not difficult to make. You can whip it up and enjoy it, and it will soon become a family favorite. Trust me, it's great. It's easy to make, like I said, and it's good for you. Anyway, listen, have a great day. I will see you tomorrow. Take good care.